Good morning or good afternoon when you start a webinar at noon. This is Jim Barlow, OakTree, Strategic Leverage. Um, this is my keystone presentation, Inversion, Thinking, and Kaizen. It's a good overview, eliminating failure before pursuing growth. The hidden problem. What derails outcomes, people's retirement or whatever, isn't what people see. It's what they don't see. The conventional question most investors ask, how much can I make? But the better question is, how do I avoid losing? I've done a circly thing around that iceberg. We want to invert. We want to look differently. We want to think differently. Charlie Munger of Berkshire Hathaway fame, this is his famous quote, tell me where I'm going to die so I won't go there. That's inversion thinking. Thinking, what don't I want to do? Don't focus on how to win. Focus on how not to lose. How people fail at investing. Early losses, sequence risk. You know, if you retire and you start taking 5% out or whatever per year, and you're taking that out during down years, you can't recover. That sequence, loss at the wrong time, emotional decisions. My career as an investment advisor, I've seen a lot of people make emotional decisions and lock in their losses. Unprotected leverage. Leverage got to be careful. I've seen a lot of people get hurt because of leverage. Loss, timing control. Things happening automatically without your choice. Taxes. They're just there, compounding the drag. Inflation. We always have to worry about inflation. We're living in a world of fiat money. So, if this is how people fail, why don't we design strategies to remove these failures first? Solve backward. Don't ask, how do I win? Ask, how do I avoid losing? If we lose 50%, we have to have 100% to gain that back. Losses are devastating. I found this chart just the other day, and I thought it was helpful. So there's the problem. What would be a bad solution? What shouldn't I do? And then how can I avoid making the bad solution that'll lead you to the good? A better design philosophy. Before growth, we eliminate fragility. Hard to say that one sometimes. We don't want something that breaks. Before upside, we protect. This is inversion thinking applied to wealth. Inversion thinking applied to football. Don't ask how teams win, ask how they lose. I was playing with AI the other day, and of course, my team is BYU. That's where I graduated. And so I put myself in a football jersey. I put number 8 on, and I guess that's in honor of Steve Young. And there I am. They even gave me some buff arms. AI, what a wonderful thing. Games are lost because of turnovers, missed assignments, penalties at critical moments, poor situational leaderships. Championship teams don't win by being aggressive. They win by being mistake-proof. Some of the playoff games were just one play, one mistake, and they lost. Enter Kaizen. Kaizen is an inversion strategy. We remove loss, timing risk, tax uncertainty through structure, not speculation. Then we discipline leverage to do its best. Traditional planning starts with growth, looking at this stock market and the growth fund or the stocks we're going to buy. Most plans fail not because the returns were too low, but because decisions are first forced at the wrong time. And I've already mentioned some of these things: selling during market declines, income arriving before it's needed, taxes compounding, leverage applied before risk control, liquidity disappears. When pressure arrives, structure decides the outcome. What happens when stress hits? Why does markets don't warn you? Life doesn't schedule itself conveniently. 2008, the market was down actually 37%. Devastating for a lot of people. 2020, liquidity freezes, opportunity disappears, layoffs, retirement, volatility, forced action. Anyway, sometimes we don't have options. If we can build something that's designed for all those moments where plans won't fail. Here's the 5 major bullet points of Kaizen. We remove loss first. There's no downside. We leverage without any risk to the leverage. We use outcomes protected by tax erosion by the strategy of taking it out tax-free. And we build this structure for all these things to happen, and we have liquidity when it matters most. As my phrase at the bottom of my logo is, smarter leverage, greater outcomes. Kaizen is a capital structure, not a product. There's the client capital, there's the leverage, and then there's the protection growth structure that we build. All 3 are intentionally sequenced to produce one result: liquidity at the right time, control, and durability. Designed to prevent failure first. Growth is reward, not the starting point. Here's another one. No negative years. We mentioned that. No personal guarantees. Tax advantage structure. Institutional limited leverage. Long-term, not forced structure. Here's another chart I built. Kaizen removes failure by design. No negative market years. No current tax drag. No outside collateral. No personal guarantees. No forced liquidations. No requirement on distribution pressure. No margin calls. Growth comes second after risk is engineered out. Designed to support outcomes. Number 1, supplemental retirement. Tax-efficient income planning. Family gifting to your children or grandchildren. Executive employee retention. Business succession planning. Charitable and legacy goals. It's creditor awareness asset protection. It's one asset, it's one thing, but you can use it for a number of uses. I can't hardly tell you everything in a short webinar, but I'm going to try to give you all the bullet points. I have them in 3 areas: foundation, growth, and control. Under foundation, we're buying a life insurance policy. We have the protection right now, the legacy protection for your family. And then we have the living benefits, the disability against accident, disability against disease. And we also have the long-term care benefits. This is the solid foundation for your family, the foundation. Then is tax-free growth and access. Life insurance, the proceeds go to the heirs tax-free. It grows tax-deferred, and we can borrow from it tax-free. No management or advisory fees. There is life insurance fees, but they are overcome. You almost get it free because of all these features. But there is no advisory fees or management fees. That's the foundation. Then we have the growth. Downside protection. There is no market losses, ever. The market is you have market linked growth, upside participation with zero downside. That's a simple concept, just those two. Then we have the control. Institutional leverage, greater growth, less personal capital, with no risk to you. 5-year funding only, finite, predictable. Trust ownership. By setting it up in a trust, we get protection, creditor protection. And they're the ones that are doing the loan with the banks. They're taking care of all this stuff. Very turnkey. You don't have to be worrying about it. It's happening. It works. And liquidity and flexibility, access to cash values, not first, but later, with no RMDs. That's really the core, those last 3 slides. There's a visual. You have 5 annual payment or monthly payments through Allianz through 5 years. We get a bank to put in approximately what you're putting in for the first 5 years. And then the next 5 years, they continue their payment, and then they continue what you are paying, approximately 3 to 1. If you're putting 100,000 in, they're putting in 300. And like I've mentioned, no credit checks, no loan documents, no personal guarantees, no signature, no collateral. You're not on the hook at all. Kairos Aurelius, wisdom removes failure before it seeks growth. Kaizen eliminates loss, timing risk, tax uncertainty through structure, not speculation. Leverage is divided only after the ground is made firm. One of our tools is the ILIA site. You can see that name in the left-hand corner. This is the one I use all the time. And you can too. It's one of the tools. I want to show you a hypothetical. I rebuilt this recently. I'm going with a hypothetical 46-year-old male, excellent health, putting in $70,000 a year for 5 years, beginning income at 65 and making sure it happens through 90. NAIC, National Association of Insurance Commissioners, has a regulated rate at all times, and currently is 6.81. Then I've got tax rates for the example. The reason why I picked 46 and 70,000, that's the average investor in Kaizen. The average person buying it is 46, and the average amount they're putting in is 70,000 per year. You can put in less, but that's the average. You can put in more. So let's see that. Let me show you the numbers. If you did an investment that at 6.81%, just a regular after-tax investment, not Kaizen, you could start an income of $58,642 per year, starting at 65. And this approach, you'd have pulled out $1,524,000 at age by 90. And I actually used every penny for that income. So there's no more checks after age 90 on this example. Or you could do it tax deferral. Tax deferral is where you use a 401k or an IRA. It gives you quite a bit more money and more total income. Now we're going to come to Kaizen. Kaizen would be same return, 6.81, about 130 per year. You pull out $3,380,000 through 90. You still have more money to pull out. You still have a deathbed to begin with. You have a deathbed at age 90, and you have asset. You can keep on taking income. Now, I want to show you some stress testing information. The Great Depression, 1930 to 32, the worst sequence of returns in U.S. history. For our stress testing, we showed 9 years of zero over 12 years. Notice it wasn't nothing less than zero, 9 years of zero. No loan default, zero floor. I'm going to show you how Kaizen would perform there. And we're also going to show you how it performs in the high interest rate environment in the 1980s, where loan rates got up to 6.88%. Here we go. Oh, I forgot that last phrase. Stress tested against both markets. So the Great Depression, instead of 130,000 in the worst time, it had been with 9 years of zeros, 84,500. Still better than either one of those two. And they didn't have a stress test on the bottom there. Or the stress test for the 1980s, 97,000. So we know it can work. What if we double that 130? Am I starting to dream now? Let me tell you. Allianz, one of our providers, wanted to check out this ILIA illustration. There's our software. So they crunched numbers and looked it over, and they came up and said, we think there's an 80% chance that 130 will be double, 260,000. Now we have even a higher range, 80% chance it won't be 130, it'll be 260. So we've tested all the way around. Now, notice at the top, I did 46-year-old male. Well, I did another one with a 46-year-old female. I want to go back and forth. So the male started getting at age 65, 130,000. The female started getting 133,000. So women are a little healthier, live a little longer. You can see the difference. Now I also did another study. Instead of being excellent health, what if this male is just average health? Well, it pulled it down to 120. So remember, we had 130, and now we're at 120. So even average health didn't hurt you majorly. Still a better program than any other way you can look at it. You really can't purchase Kaizen with lower than average health. Some tools. Here's the learning app. Here's a landing page where you can learn everything you want, everything in more detail than I have done today. There's the QR code. This has videos. It has 10 chapters on explaining the different parts of Kaizen. You can go all the way through and go to the next step and start an application, but all at your own pace. We have another one that's specialized towards gifting, and I have a brand new QR code. This one will give you to this site, and it has chapters and videos too about using Kaizen for gifting. 2 great tools. Hopefully I've given you enough, well, I bring them up to the end. So our other tool is Ilya. On my website, I got a lot of quick links that are helpful. I've got a retirement income gap calculator that I built. I think it's really good. So how do you engage? How do you look at this Kaizen? One is look at it on those landing pages. Kaizen Online, I call it. Advisor backed, learn at your pace, digital engagement, OakTree, our guidance as you need it. Just call, text, email. There's those QR codes again. Or if you want, I'll take you to lunch. We'll look at our one-on-one. I'll explain the details for you. It's the same strategy, just a different engagement style. What path you want to take is fine, whichever one you want to do. So here's my set of webinars that I'm actually building right now. You're hearing Inversion Thinking and Kaizen. Then we have the retirement incomes coming. Well, I'll show you. Then the retirement income, the family gifting. There's the executive employee benefit. There's the business succession. I'm going to do those bi-monthly. Then quarterly, I'm going to do majorly evaluate leverage, volatility, and taxes. This month, we're on that February 3rd. We're doing the flagship, as I called it. We're doing the basic one on Kaizen. Next week, we'll be doing the retirement income method. And then the next week, we'll be doing family gifting. And the last week will be the employee retention. And I'll put a new slide up every time on the webinars where you can go. There's the codes. If you want to take a screenshot, you can go to these webinars. Kairos Aurelius again. The first act of wealth is not growth. It's the discipline removal of failure. Another one. What endures is not what promises the most. What endures is what fails the least. So I appreciate your attendance at our webinar today. This is the flagship one, the Inversion Thinking and Kaizen. There's the 2 QR codes. There's my phone number if you have a question. There's my email if you want to question me that way. I'm here to help. I'm here to help people have a better retirement. And let's see, 12:24, I'm doing better. I want to keep this at a half hour if I can. With that, I'd like to sign off and let you have a great day.